Hello and welcome to the latest trades and tutorials video. This is Jeff Fish, president of MarketGauge.com. Now I'm doing this video on the eve of the election when traders, investors, the media, probably you, are all focused on which way certain stocks, industry groups, and indexes might go based on which way the election goes. Well, in this video, I'd like to take a look at a way to look at the markets such that you don't have to worry about which way the election goes. Why not focus on the industry groups, the stocks that have trends that are likely to go their own way almost regardless of which way the election goes. So before I get into that, I just want to make sure if you are just finding us on YouTube, please subscribe to our channel, like this video, and if you're finding us on Facebook, please like the video and visit our website where you'll find a lot more videos like this at marketgauge.com/tutorials. Now we also put out a lot of great information on Twitter on two different handles, one at MarketGauge and the other at Market Minute. And finally, if you're not already watching this video in HD, please change the settings in the lower right-hand corner of your screen. It'll be a lot clearer, and I think you'll like it a lot better. All right, so news about Hillary Clinton's email scandals came out over the weekend that suggested that that wasn't going to be a big unknown in the election, and the result was the market gapped up higher. So the market's telling you right there, it's right now going to be happier with a Hillary victory. Now, all political opinions aside, that's just what the market's saying. But still, there's a lot of unknowns. But what we can know is which industry groups or which sectors or which individual stocks have strength that is beyond what the market is doing to move them back and forth. And when you know that, then you can identify where you should be regardless of who wins the election. Here's what I'm talking about. Let's take a look at Mish's Modern Family. Mish's Modern Family is a group of five sector ETFs and the IWM. Now, I'm not going to go through all the importance of each one, but let's just take for granted, if you will, that I've got 5 different ETFs that give me a different measure of the health of the market here. I've got XRT, which is retail, SMH, which is semiconductors, IBB, lower left here, is drugs, IYT is transportation, KRE is financials or regional banks, and then IWM, the broadest measure of stocks in general, Russell 2000. So what we want to look for going into this election is which areas of the market have a trend that's likely to persist, even if an unexpected win in the election forces the market to pull back, or even if, or especially if, the market heads higher. Here's what I mean. Today we got good news, or at least the market got news that it perceived as good news, and if you just look at these charts, which one of the charts really blew off the doors to the upside? IYT, right? Well, the truth is IYT has been building this bullish pressure for a long time, or at least several days. Now, if you're just looking at the charts, you're seeing a consolidation, which every technical analyst knows a consolidation is power that could lead to a big breakout, and that's true. But underneath that power, we have what we call our triple play indicator here. Now, this triple play is a measure of price leadership. In other words, it's measuring the strength of this trend in and of itself. So whether or not the market is going up, how strong is this trend? I want to find stocks and groups that haven't been whacked around by all the conjecture of who's going to win. Now, you're going to see that in a number of different ways. You may see it in sideways action. I'm going to show you an example of a stock where you saw it in just straight, steady action. But when you have that, either one, this indicator down here, this top indicator is the only one I'm going to focus on. When this blue line is over the red line, it means that the strength of this trend is gaining. And as you can see with IYT, since back in here, the strength of this trend was gaining even though it was going sideways. So all it needed, so by the time it moved up here today, it was here on Friday. So all it needed was a little bit of good news to push it higher, and off to the races it goes. Now, what does this mean for IYT? For IYT, this means, and this is what I told members today of Triple Play, that IYT is an index I will look for to pull back if the market gets hit based on the election, and I'm going to look for opportunities to be a buyer against this support as long as its trend stays strong. So what does that mean? If the market continues higher, I'll look for opportunities in IYT. If the market pulls back, I'm going to look for opportunities in IYT. All right, so I don't really have to be too concerned with how the outcome of the election is, as long as I'm in the right place. Now, semiconductors, same idea. Not quite as compelling on the indicator, but just as compelling. I'm not going to go into the details why, but in short, one of the reasons why is because it's been such a strong performer on this indicator and just pulled back to the 50-day moving average, and it moves higher. So this one, if it continues to move higher, is one that I want to follow higher. If it moves lower, we're going to have to double check the indicator to make sure the trend strength is still there. All right. But can you see how much different that is than, say, the rally in IBB? So the rally in IBB here looks great, looks like a great bounce. And as much as I'd like to see IBB turn around and move higher, its trend is still in bad shape based on Triple Play. And it's not building. This is a knee-jerk reaction to the news. And if the news doesn't continue to get better, chances are this will fall back. If there's a good chance that the election will change the trend here and it'll move higher, but we'll see that in the Triple Play indicator. But for right now, I want to focus on stuff like IYT, that's already strong, we could buy a pullback. SMH, strong, probably could buy a pullback. And finally, KRE. KRE, which has just continued to be strong. Every time it's pulled back, it's rallied higher, and the Triple Play indicator in here has stayed intact. So this is one, if the market pulls back, it's one to look for support and be a buyer. If the market continues higher, it's one to look for the trend to continue higher. Now, this doesn't just work in industry groups, so keep an eye on those three industry groups, SMH, IYT, and KRE. Let's take a look at a couple stocks to show you how this plays out in stocks as well. So here's FTI. FTI, while the overall market has struggled, rolled over, and been consumed with what's going to happen in the election, FTI hasn't cared. It had a nice transition over its 200-day moving average, which is the green line, and 50-day moving average, which is the blue line. Consolidated, you can see its trend went from negative in here to positive in here, and then during the consolidation never turned negative, and then as soon as it started to break out, got really positive here, and that's why it was an indication of the strength that then took this thing up almost 10% in less than a month. At the same time, the market was rolling over. Now, it still looks strong, and as long as this continues to look strong, this is one that should be watched on a market pullback and watched if the market moves higher. Again, either way the market moves, this is one that has strength in its own trend. Now, some of these really start to just take off and just keep going and going and going. IGT is an example of one. As you can see, let's just take a look back at Brexit. So here's Brexit. Brexit took this thing negative for a couple of weeks here, but it held up. And when it broke out here, you're often wondering, oh, break to new highs. Is this a trend that's going to continue or not continue? Well, here's the strength of the trend down here in Triple Play. This is what you look for on breakouts to tell you that the breakouts are likely to be good. And as you can see, not only was the breakout good, but every time it pulled back to the 10-day moving average, this thing was rock solid, and it just continued and continued. And still, even with all the anxiety in the markets over the last month, this thing has not been affected, all right, and still strong. Now, don't just run out and buy IGT or buy FTI because they look good now, because you do need to keep an eye on the trend. So let's take Apple, for example. Apple, nice pullback, into the 50 and the triple play indicator pops to the upside when the price goes up and holds as it moves higher, indication that this move all looks really good, right? But when it rolls over here, this pullback doesn't look much different than, say, the IGT pullback right now. This warned you that the strength of this trend was no longer what it was over here, and such it fell back along with the market. So don't just go out and buy FTI or IGT because they look strong right now. You do need to know how to keep track of them, right? But those industry groups, those are ones I would look to buy on pullbacks, at least if it happens in this week and then the market starts to turn higher. Now, later this week on Thursday, I'm going to do a special presentation to identify stocks that have great looking triple play indicators and what these triple play indicators are all about so that you can use them as effectively as we do. I will put that link in the text that is surrounding this video, and the training is free. Hope you can attend, and best of luck with the election. Post-election trends are going to be great for trading regardless of who wins. So look forward to that, and hopefully I'll see you Thursday evening in the training, and hopefully you've enjoyed this video. That's all for now. I'll see you in the next video.